Hello viewers, we'll be going over gold miners, ETF ticker symbol GDX. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, and the day-by-day forecast for GDX. So back to the technical analysis. Today we're up 60 basis points on the 1 hour chart. We are nearing overbought RSI, and we see a healthy upside momentum on the positive MACD. As for the 4 hour chart, we are also on positive MACD and we are still seeing heavy momentum to the upside. As for the daily chart, we are also approaching or nearing overbought RSI. We see a slight divergence on the daily MACD. And if we were to continue to move up higher, the next resistance that I see will be a multi-year resistance. We see a possible resistance around the price of where we saw previous support that dated back to, I would say, May 14, 2012, and that is around a price of, I would say, $39.24. And if we were to move to the upside, that price movement is roughly around, I would say, it would be 14% to the upside to hit that next resistance line. And as for resist or support, if we do manage to reverse and head down lower, the next support that I see was made back last week, May 1st, as well as their support level around the price of $31.73, and that was previous resistance that dated back to February 24th. Again, that price level is roughly around $31.70. And if we do manage to head down lower, that price movement to the downside is roughly around 7.5% to the downside. So let's examine the day-by-day probability model. Again, these models are now available in the link below, so do check it out. So as the days progress to the 7th day, we have a 53% chance for gold miners to climb between 0 to 7%. On the extreme case, we have a 12% chance for gold miners to climb between 7 to 14%. And on the other hand, to the downside, we have a 35% chance for gold miners to fall between 0 to negative 7%. So let's examine the day-by-day forecast for GDX. So we have 1 day out, that would be a Wednesday, and 2 days out will be a Thursday. So 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here on the blue line is our current trend, and overlapping it, the green line is the trend that I believe is the best match. And right here is our current trend, and below is the trend in question that I found in the line graph to be the best match to the current trend. And this dates back to February 5th, 2015 to May 4th, 2015. So let's point out why these two charts are similar. So on the current trend, we start off at the bottom Bollinger Band, revert back to the mean to the middle Bollinger Band, and once more dip lower to the bottom Bollinger Band, and then rested along the middle Bollinger Band for several days, and then continue to reverse higher. And now the trend in question, we start off at the bottom Bollinger Band, revert back to the middle Bollinger Band, and dip lower to the bottom Bollinger Band, and then rested along the middle Bollinger Band for several days, and then we climb higher to touch the upper Bollinger Band. So what we have here is 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points on the current trend. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was February 5th. So let's see where February 5th would be at, 2015. So back then, February 5th to May 4th, 2015, back then, gold miners was up around 1.7%, slightly to the upside. So if we examine the day-by-day probability model, that coincides with this standard deviation to the upside of 53% chance between 0 to 7%. So let's examine the technical performance of each model. So the model that we just examined, or let's find the current trend. the current trend we're in, we're 0% from monthly high, we're up 44% from monthly low, we're up 1.7% from 10 simple moving average, up 8% from 20 simple moving average, and up 22.6% from 50 simple moving average. And now the trend that we just examined, it was down roughly around 6% from monthly high, up 13% from monthly low, up 2% from 10 simple moving average, and up 3.4% from 20 simple moving average, and up 5% from 50 simple moving average. There are technical similarities, but the key differences are the amount between where we saw the monthly low, that's 44, compare that to 13% chance, or 13% higher from monthly low, and also the technical or percent difference on the 50 moving average is 22, compare that to 4.9%. So do keep in mind, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.